September 28, 2008. SpaceX Mission Control, Kwajalein Atoll, Marshall Islands. The third rocket has just exploded. 3 failures. 3 years of work. The cargo on that third rocket included a NASA science experiment and a container of human ashes. People who had paid to have their remains sent into space. Both destroyed. Musk has enough money for exactly one more launch attempt. 1. He stands up in Mission Control and tells his engineers it is not over. 41 days later, September 28, 2008, the fourth Falcon 1 launches and reaches orbit. For the first time in history, a privately funded liquid fuel rocket has made it to space. What almost nobody reported at the time was what else was happening that same day. Tesla was effectively bankrupt. His marriage was ending. He had been crying in his car repeatedly. It was, he later said, the worst year of his life. The company saved by that fourth rocket is now heading to NASDAQ in June 2026 to raise $75 billion at a valuation of $1.75 trillion. SpaceX says it exists to prevent humanity from having the same fate as the dinosaurs. That is in the legal IPO filing. The company received $38 billion in government money, while its founder was cutting everyone else's. And the IPO carries zero key person insurance on the one man the company admits it cannot function without. Those 3 facts are what you are actually buying when you consider investing in SpaceX. Here is the complete picture. Let us go back to that flight from Moscow. February 2002. Musk is in economy class. He has $165 million and he is flying economy because spending on himself has never been the priority. He opens his laptop. He is genuinely angry. $18 million for a second-hand missile. He starts at the other end. What does a rocket actually cost to build from raw materials? Aluminium airframe, carbon fiber composite, titanium fasteners, copper wiring, kerosene fuel. He runs the numbers somewhere over the Caspian Sea. The raw material cost of a fully functional orbital rocket, approximately 3% of what aerospace companies charge. 3%. The other 97% is labor, overhead, and, his word, a complete lack of incentive to be efficient because NASA will pay whatever it costs. He turns to his friend Adeo Ressi and says quietly, "I think we can build this rocket ourselves." That calculation, made in economy class over Russia, is the founding intellectual act of a company now filing to raise $75 billion. The Russians charged $18 million for a second-hand missile. Musk decided to build a new one for less. He was right. Here is the part of the SpaceX story that most YouTube channels skip because it complicates the narrative. The self-made disruptor did not do it without the government's money. In February 2025, The Washington Post published the definitive analysis. Musk's companies have received at least $38 billion in government contracts, loans, subsidies, and tax credits since 2003. That figure excludes classified contracts. In 2024, the year Musk was leading Doge, cutting government spending for everyone else, his companies received a record $6.3 billion, the highest single-year total ever. SpaceX has received at least $1 billion every year since 2016. NASA is SpaceX's largest customer. Now, is this a scandal? No. The contracts were won competitively. SpaceX provides genuine value. Gwynne Shotwell, SpaceX's president, stated explicitly, "We earned that. We were the lowest price, best bidder." She is right. But the self-made billionaire disrupting the government space program is simultaneously one of the largest government contractors in aerospace. The contract that saved SpaceX, NASA's $1.6 billion ISS resupply deal 3 months after the 4th successful launch, was government money at the critical moment. Both things are true. Understanding both is essential before you decide whether to invest in the IPO. But let us be precise about what SpaceX actually achieved. Before SpaceX, every orbital rocket was discarded after one use. The first stage, the most expensive part, containing the engines, fell into the ocean after every launch. Building a new first stage every time is the equivalent of throwing away a Boeing 747 after every flight. Nobody would run an airline that way. Musk refused to run a rocket program that way. SpaceX has now landed and reflown first-stage boosters more than 300 times. The booster with the most missions has flown 22 times. The cost per kilogram to orbit has fallen from $54,000 in 2000 to approximately $2,700 today. A 95% reduction. That is not improvement. That is a restructuring of an entire industry's economics. The satellite industry repriced itself. GPS constellations that would have cost billions became viable. The Starlink constellation only exists because launch costs fell far enough. And in 2026, SpaceX filed with the FCC to build a space cloud of up to 1 million satellites, roughly 100 times larger than Starlink, to support AI computing in orbit. One man's calculation in economy class over Russia changed the economics of an entire industry. Starlink has 10 million subscribers. It generates more than half of SpaceX's total revenue. And if you pay for Starlink, you should understand what your money is actually funding. According to SpaceX's own IPO filing, Starlink revenue is the primary funding source for the Starship rocket program, the vehicle designed to carry 100 people to Mars. Your monthly broadband subscription is, in a precise financial sense, contributing to a Mars mission. That is not a metaphor. It is what the financial statements show. Starlink's significance extended further in February 2022. Russia invaded Ukraine. Within days, Musk delivered Starlink terminals to the Ukrainian military. Ukrainian field commanders publicly credited Starlink with transforming their ability to coordinate forces. A consumer broadband product became military infrastructure that influenced the outcome of a major European war. The same satellites, the same dish on your roof. Two completely different purposes in the same product. On May 21, 2026, SpaceX filed its S-1 prospectus with the SEC. Legal documents must be accurate, or the company faces criminal liability. Page 47 contains a sentence no CEO has ever put in a legal document before. The current paradigm, in which human civilization is confined to one planet, exposes humanity to existential threats that are unpredictable and uncontrollable on a planetary scale. We do not want humans to have the same fate as the dinosaurs. That is the company's stated purpose. In the same document, Musk's compensation is tied to 2 milestones: a $7.5 trillion company valuation and a permanent Mars colony with at least 1 million inhabitants. not a vision statement, a legal pay structure. But the same document also contains a disclosure that financial analysis has largely overlooked. SpaceX carries zero key person life insurance on Elon Musk, despite stating that he is the driving force behind our growth, innovation, and operational success. A 24/7 Wall Street analysis published 2 days ago noted that Musk cannot be removed from his CEO and board role without approval from Class B shareholders he controls. Morningstar analysts have warned of 20 to 30% stock swings in response to Musk-driven news. You are not buying a company. You are buying a man who has designed the company so that nothing and nobody can separate them. 3 things before the SpaceX IPO opens in June 2026. First, the Starlink business is real. 10 million subscribers, growing. The internet infrastructure business alone, at standard telecom multiples, justifies a significant valuation. This is not a bet on Mars, it is a functioning internet company. Second, the Mars optionality. If you believe Starship reaches Mars and the colony generates economic activity SpaceX can monetize, you are potentially buying the most undervalued asset in history. If you believe the Mars timeline continues to be deferred, as it has been multiple times, you are paying a premium for a story. Third, the single point of failure question. Zero key person insurance. Cannot be removed. 20 to 30% potential stock swing on Musk news. This is the risk the prospectus discloses, and investors are choosing to accept. The IPO is a bet on Musk's judgment, Musk's attention, and Musk's continued involvement. Simultaneously, the most important and the most concentrated governance risk of any major public offering in 2026. SpaceX is the company Musk built with a spreadsheet on a plane. It is also the company the government funded at every critical moment. Both things made it what it is. But SpaceX is not the company where the gap between the promise and the legal reality is the most consequential for ordinary people who trusted him. In October 2016, Musk made a specific promise. On stage, on Tesla's website, in marketing materials distributed to millions. He said every Tesla built from that day had all the hardware needed for full self-driving capability. In January 2025, 9 years later, he admitted on an earnings call that the hardware in millions of those cars could not deliver what he promised. The class action lawsuit that followed is now worth $14.5 billion. The specific timeline of what he promised, when he promised it, and what the court documents now say about what he knew, that is episode 3, coming up next.